Global tensions are rising, and financial markets are feeling the pressure. From conflicts in the Middle East to uncertainty in global trade and rising oil prices, geopolitical risks are beginning to reshape how investors think about money. In the middle of all this uncertainty, Bitcoin is gaining attention as a potential safe haven asset, similar to digital gold. But could global conflicts and shifting financial systems actually push Bitcoin even higher? Today, we will talk about why geopolitical risk may be the reason to buy more Bitcoin. So before we start, make sure to hit the like button and subscribe to my channel. Institutional expansion in Bitcoin ETF. Morgan Stanley has entered the spot Bitcoin ETF market with the launch of its Bitcoin Trust. The fund debuted with about $30.6 million in net inflows and $34 million in trading volume, showing early demand from the bank's wealth management clients. MSBT charges a 14 basis point fee, undercutting many competing products and continuing the trend of fee compression in the ETF market. Despite this launch, U.S. spot Bitcoin ETF recorded around $94 million in net outflows. Large withdrawals came from Fidelity's FBTC and ARK and 21 shares ARKB, while Grayscale's GBTC also saw losses. Meanwhile, BlackRock's IBIT attracted $40.4 million in inflows, maintaining its position as the dominant liquidity hub. Many analysts believe the outflows are due to profit-taking after Bitcoin rebounded. From around $67,800 to above $70,000 following news of a temporary ceasefire related to U.S.-Iran tensions. Bitcoin's recent price momentum. Over the past few days, Bitcoin has climbed from the high $66,000 range into the low $70,000, briefly consolidating before pushing higher. Positive news from the Middle East helped the asset reach approximately $71,900 in recent trading. Rising competition in the ETF market. The launch of MSBT adds another competitor to the growing spot Bitcoin ETF market. Since these products first launched, lower fees have become a key strategy to attract investor capital. While lower costs benefit investors, they also increase pressure on issuers, making scale and distribution crucial for survival. Even with new entrants, BlackRock's IBIT continues to dominate due to strong liquidity and consistent inflows. Major changes in market leadership would likely require sustained outflows from current leaders or aggressive pricing from new competitors. Geopolitical pressure on the global financial system. Global tensions are also affecting financial markets. Foreign central banks have sold $82 billion in U.S. Treasury bonds since the U.S. and Israel began military operations against Iran, according to the Federal Reserve Bank of New York. Custody holdings for foreign governments dropped to $2.7 trillion, the lowest level in 14 years. Iran's attacks on cargo ships in the Strait of Hormuz and rising oil prices have pressured many economies. Higher oil costs have also strengthened the U.S. dollar, prompting some countries to sell treasuries to support their own currencies. These sales have pushed 2-year and 10-year U.S. Treasury yields to their highest levels since 2024, increasing borrowing costs for the U.S. government. With the national debt nearing $40 trillion, the U.S. already spends about 1/5 of tax revenue on interest payments, making higher rates an increasing concern. The petrodollar system. The strength of the U.S. dollar largely comes from the petrodollar system, where most global oil trade is priced in dollars. This system began after 1971, when President Richard Nixon ended the dollar's link to gold. The United States then convinced Saudi Arabia to price oil in dollars and invest oil revenues into U.S. assets, creating long-term global demand for the dollar. However, recent tensions and uncertainty over U.S. security commitments have raised questions about whether countries might begin moving away from dollar-based oil trade, potentially weakening one of the dollar's key supports. Iran's Bitcoin payment experiment. A major shift occurred when Iran announced a $1 per barrel toll for ships passing through the Strait of Hormuz, payable in Bitcoin. Because roughly 1/5 of the world's oil supply normally passes through the strait, this move could significantly increase Bitcoin's role in international commerce. Bitwise Chief Investment Officer Matt Hougan argues that if Bitcoin becomes both a store of value and a global currency, its long-term price potential could reach $1 million per coin. Bitcoin's performance during the conflict. Since U.S. and Israeli airstrikes on Iran began, Bitcoin has risen about 12%, while the S&P 500 fell 1% and gold dropped 10%. This performance challenges the view that Bitcoin is simply a high-risk technology asset. Analysts say investors are increasingly viewing Bitcoin as both digital gold and a potential global payment system, a shift in global financial thinking. Researchers at the London Crypto Club say Iran's move represents a major shift in the financial conversation. They compare it to Russia's removal from the SWIFT system in 2022, which led many central banks to increase gold reserves after realizing their access to the global financial system could be restricted. Now, some analysts believe countries may begin considering Bitcoin as a neutral reserve asset, especially if geopolitical tensions continue to fragment the global financial system. Market reaction to the conflict. Bitcoin recently rallied past $75,000, rising more than 5% in a single trading session. Markets climbed even as geopolitical tensions increased after peace talks between the U.S. and Iran broke down, and a U.S. blockade targeted Iranian ports and parts of the Strait of Hormuz. Crypto analyst Lark Davis noted that the market's resilience likely reflects expectations that the conflict may be short-lived. Higher oil prices caused by disruptions in the region could also increase inflation pressures, which historically strengthened Bitcoin's appeal as an alternative asset. The bigger picture. According to Matt Hougan, investing in Bitcoin today is essentially making two bets at once. The first is that Bitcoin becomes digital gold, capturing part of the estimated $38 trillion global store of value market. The second is that Bitcoin evolves into a global settlement currency, especially as geopolitical tensions weaken reliance on traditional financial systems. If both trends unfold, analysts believe Bitcoin's potential market could become far larger than the gold market alone. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment and click the button to subscribe.